Hello and welcome to this week's Market Outlook webinar. I'm David Jones and we're doing this in conjunction with Aondo Markets. If you're watching the recorded version of this, it was held live on Wednesday, July the 13th at 12:30 in the afternoon. Before we start, we'll just put that risk warning up so people can read it. There's a lot of stuff been happening in the last couple of days. We've seen US stock markets move to all-time highs. We've seen something of a strong bounce in the pound against the dollar after the UK government sorted out who the next Prime Minister is going to be. And oil, we've seen something of a turnaround in the price of oil, but we'll talk about all of this as we go through today's webinar. If you're here live at your end of the webinar, you've got a chat box, so if you have any questions, feel free to just fire them in. Right, we're going to take a look now at Aondo's trading platform. So this is TradeHub. So we'll do all of the charts and stuff on this today. So we might as well start off. We'll start off with that pound against the US dollar because we have had such a strong bounce this week. But first of all, just to get some perspective, let's just see where we are at the moment. So you can see on your screens there, you can see clearly that the EU referendum move, when it moved out to 150, then as sentiment changed overnight, we saw it come crashing back down. Then we had, it does appear that whenever Mark Carney, the Governor of the Bank of England, sort of speaks to try and reassure markets, that the pound would nosedive again. So we saw another move last week to a 30-year plus low, so plenty of volatility. But so this is the daily chart that we're looking at now. Let's just flip it over to the hourly chart. Hang on a second. Let's just change this on the scale, and you get a sense for the size of the move that we've seen this week. And it's all to do. I suppose you could call it the May bounce. I think when May with May the name, not May the month. I think when we heard that Theresa May was going to end up as leader of the Tory party, next Prime Minister. So I think it's all changing over today, isn't it? David Cameron has got the movers in, and it's his last day as Prime Minister, last Prime Minister's questions time. But it was all around here, you know, we were trading around about, 128.50, those sort of levels earlier last week, and then we've seen just it continue to rally. So we have seen, you know, an impressive rally over the last week, something like a 400-point move in the pound against the dollar. You know, that's a pretty sizable move in the last couple of days or so. And maybe now we'll just have something of it mark in time, you know, because tomorrow is a big event. We've pushed back up to these levels here, and we're still a little bit capped, I think, by these old highs from the beginning of the month. So coming in around about the 133.50 mark. You can see, you know, when it was merrily chugging higher the early hours of this morning, it has sort of stalled up at these sort of levels. And if we flip it over to the short term, the 10-minute chart, you know, you'll see for today, for most of today, we'd be carving out, you know, something of a pretty sideways range after that move back up to those old highs. Saying that though, you know, it's still a tradable range. You know, we're up here at sort of 133.30, 133.40 is where it runs out of steam. But down here, around about the one ahead of sort of 132, we've seen the buyers come back out. So this afternoon, if you really wanted to trade it, then, you know, maybe a level to watch is how it reacts down at these sort of levels, these lows from earlier in the day. If we looked at those sort of levels here we go. We can see twice 132.20-ish. The buyers come back in, and currently it's 132.58. And I'm a big fan of looking at this idea of previous support and resistance levels to get an idea where a market may turn out. I did a trade on the Aussie Dollar earlier this week, which I'll talk about when we have a look at that, because that's had some interesting moves as well. But maybe now for the pound, we just have this chop until we see what happens tomorrow. So 12 o'clock tomorrow is the Bank of England's rate decision. So we're expecting the first move in interest rates for many years, with speculation that there'll be a move downwards, you know, post the Brexit vote, to try and sort of reassure markets. Now, normally, you know, a move downwards in an interest rate for a currency would make that currency weaker, you know, because it suggests that you're better off maybe parking your money somewhere else. But I think with the pound, because it does seem to be pretty well expected, this move, we may not see it weaken that much. I'll just show you something else. I did a poll on, I think it was Twitter, earlier this week, and if you see, I think you can see it at the top here, what's the Bank of England going to do on Thursday and the likely pound impact by the end of the day. And you can see most respondents, there were 270 people who responded to this. Most people are expecting a cut tomorrow. I think we're expecting a cut of 25 basis points, a quarter of 1% tomorrow. So 2/3 of people thinking we'll see a cut, but fairly split. But most, for now at least, going for the pound to rise. So no surprise is what they're thinking for tomorrow's move by the Bank of England, and the market will just shrug it off. We'll see what happens, but 12 o'clock tomorrow is the time to watch. So we could have a pretty volatile session tomorrow afternoon, and but maybe something of sideways trading until we sort of get that decided. Okay, so there's our, let's just zoom out to where we are now. It is coming down. I suppose if there was, we'll see what happens this afternoon, that it's 132.20, see if there is an opportunity down there. Personally, I think tomorrow, if they do cut, assuming they will cut rates, I don't think it's going to go down much. I would expect it to be flat to slightly up. So for me, if we did get something of a knee-jerk negative reaction for the pound tomorrow, for me it looks like a buying opportunity. But let's have a look at some levels. Let's see, what sort of levels we should be looking for tomorrow. We've had various support levels left on the way up, on this move by the pound against the dollar. And let's say maybe the immediate levels, it's a way, because of the size of the move, it's a bit of a way away from where we are now. But I think it does look like the round numbers, back ahead of 130-100. So if we did see a sharp drop on this tomorrow, I'd be looking for these levels to provide a bounce. Saying all that, let's not get too carried away. Even though we have seen an impressive rally, we're only back to where we were. Well, actually, we're still lower than where we were immediately after the results on the 24th of June. So I think that the big hurdle on the upside, I think if we saw it move through this 133.50 level, pound against dollar, then maybe we'll see more panic buying. People thinking, well, actually, it's not going to go to parity with the US dollar. We might see something of a recovery. So plenty to watch, I think, in the days ahead, but maybe something of a quiet one until we get that decision out of the way tomorrow. But let's look at something that hasn't been quiet. It's definitely had direction. I'm sure if you watch the markets, you saw the news over the last couple of days. US stock markets out to fresh all-time highs. So at levels not seen before. This is the Dow that we're looking at here. The previous high was 18,351, and that was back in I think it was May last year. But yesterday we managed to break through that high and push out to 18,354. Now, if you know anything about basic technical analysis, a market breaking out to new highs is considered a very bullish sign. A level that in the past the market had struggled to get by. Suddenly there are people happy to carry on buying this market, and we've seen it in the Dow and the S&P. So from a technical trading point of view, the only way to be on US stocks at the moment is to be a buyer. Personally, I do have a real problem into buying into strength like that. Ideally I always want to try and buy a pullback. The problem is you can see there over sort of so far over the last couple of weeks, there hasn't been much in the way of pullbacks. These are the hourly charts that we're looking at here for the Dow, and it has sort of started moving and hasn't really looked back that much. Even if it dropped a couple of hundred points, which is nothing. What's 1%, just over 1% for the Dow, it would still be within that uptrend. So I think for short-term traders, a big thing that I look at is this idea of the previous day's high and low. So this is the pre-market Dow. So it's traded in a range of about 50 points so far during this European session. But if we have a look at maybe what were the lows yesterday, that's maybe a level to look at going in today. So that was the high it set about just after 7 o'clock UK time, up to 18,375. But before that, when it opened officially, here's the official opens at 1:30 yesterday. It rallied, it sold off, and it dipped back to 18,290. So for me, if I was looking to try and identify an area today where we might get a short-term bounce on any weakness, I can buy it maybe a bit cheaper. I think I'd watch it if it starts drifting off towards the 18,300 level, watching for strength to come in ahead of these lows from yesterday. We'll see what happens. We'll see what happens in a couple of hours when it starts trading officially. But like I say, with a move out to fresh all-time highs, from a technical point of view, the only thing to be is a buyer. Is to look to be, rather than trying to call the tops, is look to buy on any weakness. We'll see how it pans out. But that for me is the first level to watch. This at 18,290. 18 sort of 300 level, and then if we went back to the sort of previous days, let's have a flip on an hourly chart and look a little bit further back. There we go. So there's our lows from yesterday, and then if we're going back to the 11th of July lows, we'd be looking at maybe the pre-market lows 18,150. The actual market low is about 18,2. So again, it's pretty much near round numbers. But for me, any weakness on that looks like a buying opportunity. Interestingly, I think fairly interestingly, we haven't really seen, not in the last couple of days at least anyway, UK stocks following it up that much. We saw the Dow powering higher into late yesterday, but the FTSE made its high. This is the FTSE 100 we're looking at. The FTSE 100 made its high at about 2 o'clock yesterday, and then didn't really do anything. And today it's had another look at that 6,700 high, and it's come off a little bit. But again, for me, I suppose if you wanted to be, really aggressive, you could go short the FTSE here at 66.84, maybe expecting a bit more weakness, but with a stop loss above those highs from yesterday, around about the 67.10, 67.05, 67.10 mark. But again, for the FTSE, if we do see the US stock market continue to climb, you think the FTSE 100 is going to get dragged back up with it, but maybe not quite as clear on the FTSE. The same for the DAX, really. Look at the German DAX. You can see a similar sort of move to the FTSE. It made its high yesterday, just above that 10,000 mark. Even earlier yesterday, up above 10,000, and it's sold off. It's come back. It's had another little look today in the last hour or so, and it's starting to drift back a little bit. So again, an aggressive trade here would be to go short with the stop above that yesterday high. But with the trend so strong, you are flying a little bit in the face of the trend there. Let's have a look on the daily charts for the DAX just to get the big picture. And you can see, US stock market's powering away. The DAX is still well below those sort of post-Brexit highs of 10,500. So we do have something of a disconnect between global stock markets at the moment. We'll see how that pans out over the next few days. But I personally think the US markets are the ones to watch for direction. Before we finish on stocks, let's have a quick look just at the FTSE 250, because the FTSE for UK viewers, FTSE 250 has been very much in focus in recent weeks post-Brexit, post the vote. With many people saying, well, the FTSE 250 is the one that's more indicative of the UK economy, because most of the companies in the FTSE 100, as you know, big international companies, the miners, the oil companies, the banks, whereas the FTSE 250 is more of a UK mix of companies. But we can see this is the levels before the vote, so closed around about 17,200. And at the moment, with it trading around about 16.7, we're not a million miles away. It has managed to claw back, I think, a lot of that post-Brexit fear. Whether that ends up being a dead cat bounce, we'll have to wait and see. Let's just have a look at some more currencies. I think an interesting one to watch for me at the moment is dollar yen. So over this weekend, the weekend just gone, we had a general election, or an election in Japan for, I think it's their upper house of parliament, and I think the existing government won out. And we've seen this week, so what we're looking at here, these green candles, the last few days, we have seen a rally in dollar yen, and of course when it's going up, what we're seeing is dollar strength and yen weakness. And what the Japanese government want definitely is a weaker yen. They do not want a strong yen, because a strong yen really dents their exports when they're trying to sell stuff overseas. So so we've seen the market react, assuming that the government looks pretty stable, and they're going to carry on with their policy for the last couple of years at least of trying to have a weaker yen. So we have seen something of a reaction to that by the dollar. But if we look at the big picture, I think it's the slightly bigger picture. It's a really interesting one in dollar yen. If we look at the moves since November last year, it's gone from 123 down to 100. So we've seen a sizable move lower in dollar yen. And for me, even though yes, it has been a strong move over the last couple of days, I still think let's just plonk our trend line on here. If we look at this, it doesn't change that major trend in dollar yen. So we've had a bit of a squeeze higher, but we've seen plenty of rallies over the last 6 months in dollar yen, and ultimately they've proved unsustainable. So I do wonder, or I do think, well, for me, the trade, I think I put it on Twitter earlier this week, the trade for me in dollar yen is to look to sell into weakness. Look at assuming that this trend is going to continue. So we're going to look to get short somewhere with a stop somewhere. So for me, on the dailies, maybe the first obvious place for the stop, if we're going for a bigger move, is above this sort of spiky high from the 23rd of June, from, again, Brexit vote day, up above there. If the market rallied a bit higher, then we're looking at these highs back here. And you can see also, if you look at the RSI, traditional measure of overbought, oversold, we're not quite there yet, but it wouldn't take much for the RSI for dollar yen to move into overbought, again suggesting that maybe this bounce has gone too far. You have to be careful with the RSI, because look, in the past, we are getting these signals here to sell it in the past, and they were premature. What was this one like back here? That wasn't bad. That pretty much nailed it, as did that. But again, that one there looks a little bit early. So I think we wouldn't follow the RSI, religiously, but I think it can give us something of a handle on, is the market thinking, well, actually, this has probably gone far enough. Let's have a look at the hourlies to get a feel for maybe the shorter term. So here we go. If somebody put a gun to my head and said, right, you've got to trade dollar yen now, then I think maybe the trade I would do would be to sell it and sort of dipping toes in for a short, because even though it's rallied for a couple of days, that big trend is still down. So for me, one trade to do would to be short now, dollar yen 104.64 with a stop above that high. So stop above that sort of 105. It's almost bang on 105, the highs, isn't it, from earlier this morning. So a stop just above that level there. What is it? Hang on, let me point over there. And I can see it in the bottom left on my screen. Looks like 104.98 was the high. So for me, that would be an aggressive trade if you thought it was going to come off from here. Sell it now with a stop just above 105 and seeing how much of this move retraces. So I do think, whether it happens from now or whether it happens for a couple of days, for me, I think that the trade for dollar yen is looking to sell, assuming that downtrend is going to continue. The only thing that would change my mind, I think, if we saw strength back to these early June highs at around about 107.30. Is it 107.30? No, 107.90. The 107.90 level back here. But I think it's an interesting one up here because it has come, so far, so quickly. I think the last couple of days, what's it done in the last couple of days? It's gone from 100 to 104. So we've moved 400 points this week in dollar yen after that election. And maybe it's maybe a little bit overcooked. The only FX trade I've got on at the moment is euro dollar, and it is busy going nowhere fast. Euro dollar. I think I've had it for since Thursday last week, and it's just going nowhere. But let me look at the big picture for euro dollar. So we saw that big move down again, the EU referendum vote, and I took the view, well, maybe this has been a bit overdone. And if we flip onto the hourly charts, I think about a week ago, I think when it sold off, and it was ahead of the payrolls, so a couple of days ahead of the payrolls, and we had some big levels down here, sort of 1.1, and then I bought when it was dipping down to this first level back from here, so ahead of sort of 110.25, and I was buying in here with a stop loss the other side of 1.1. Flukily, I didn't get stopped out on the payrolls move. But since then, it's maybe a few points ahead now, but I was expecting it to start a recovery, but it's really struggling to crack, again, this sort of pre-payrolls or post-payrolls high. It's really struggling to go anywhere at the moment, dollar yen. So for me, I still think it looks bullish, because it does seem to get, snapped up on weakness, but saying that, it doesn't actually make much headway when it starts to rally. So it is not the most exciting trades at the moment, dollar yen. One I did earlier this week, I mentioned Aussie dollar, so I've been in and out of that, out of it maybe a bit too early, but Aussie dollar, again, if we look on the daily chart, so this is the Australian dollar, US dollar. My background is technical analysis and really, looking to identify trends and all that sort of stuff. And we've clearly in the last couple of months, 6 weeks, wherever it is, we've got something of a trend in Aussie dollar, which is still chugging along. There we go. So that's a trend in Aussie dollar. So I was looking at this at the end of last week, thinking, well, this week I wanted to see if I can buy on a pullback, try and get into the trend. And I was looked at it on Monday of this week, and it was sort of pulled back a little bit overnight. Ideally, I was looking for it. I was going to have my stop beyond these sort of spiky lows at 74.70. So I thought if it drifts back to the low 7500s, I want to be a buyer. But I looked at it on Monday morning. So look at the 10-minute charts, and I'll show you sort of what I was thinking earlier this week. Let me just step it back a little bit. There we go. So I was sort of, it was dipping back on Monday morning here, but wasn't really falling that far. So I ended up buying in the end. I think it doesn't quite go far back enough, this chart. Let's make it 15 minutes and we can maybe get it all in. There we go. Let's just zoom that back out. So this was the dip on Monday morning, so that's sort of 8:15, 8:30, and then it came back down about 10 o'clock, 10:15 on Monday, came back to the earlier low, and it started to move a little bit higher, and I thought, well, maybe that's it, maybe that's the move done for the day. So what I did, I thought I'm going to buy here, so I ended up buying it at 75.47, and let me flip this out and I'll show you. My stop loss went, so I was buying on Monday just sort of in here, and my stop loss went just the other side of this hourly bar after the payroll. So that manic move on the payrolls on Friday, the market calmed down a bit and pulled back. So I was buying here with a stop just the other side of that bar. And although the market did move a little bit lower by I was about 20 points offside, I think, at the worst case on that one. There we go. So the market, I bought it in here. The market moved in my favor quite quickly, but not that far, maybe 20 or 30 points. And because I had something like a 40-point stop loss, I wasn't going to move my stop loss just because the market was 20 points in my favor. Then sold off a bit later on, then recovered, and then in the early hours of, when was it? Yesterday, the market really started to move higher. So I moved my stop up, so trailing behind the market, and then got taken out just here. So I came out at 76.13. So I made, in the end, less than I thought I would make, but I made, I think it was about 65, 70 points in the trades in the end. And for me, I'd still be a buyer now. If we flip back to the daily view on Aussie dollar, it's starting to poke through these old highs. If we saw a reasonable decline, I'd still want to be a buyer. And I think only if it slips below 7,400 does it look that maybe that trend's running out of steam. A couple of final ones, a couple of commodities. I think I think oil's really interesting at the moment. We'll end on oil, but let's just do gold first, the price of gold. So let's look at the daily chart. So I must admit, I've not traded this, but I've been a bit wrong-footed by it because I did think, it pushed out to multi-year highs, and it's really run out of steam the last couple of days. But if you drew trends on gold at the moment, you've got that big trend from back there from December last year, but then the trend that I'm more interested in, and again I think like dollar yen, maybe the one to watch over the next couple of days, is this one here since the beginning of June. So we've got that trend that's accelerated, and the price of gold has slipped off. We've seen a bit of a recovery today, and if we flip over to an hourly chart, so what I'm expecting, what I'm waiting for, is to see if the market hooks its way back higher and we get a recovery and a move back and maybe even through these old highs. Today it has slipped below this old support, which isn't very encouraging, I don't think. So I wouldn't be a buyer today because it's moved to a new low for the down move today. But maybe over the next couple of days, we might see it start to form a base ahead of this old support, ahead of, sort of down these sort of levels, 13.20, 13.12 sort of levels. So I think gold's an interesting one because we've got that trend in place, and although it's sold off a couple of days, big deal. It's sold off before on the way up. And finally, so one that I think has turned the corner yesterday is the price of oil. So if we've seen that fantastic recovery in oil this year, but the last couple of days, well, last couple of weeks, sorry, it has spent a bit of time coming off, selling off. But if we flip it over to the hourlies, I think the move that we saw yesterday, so this is the hourly chart for the month so far. So we've been coming down from $50 down as low as sort of early hours of yesterday. Well, actually, no, sorry, late Monday, down to sort of 44, 42. But yesterday we saw this really sharp move, and it took out the previous day's high, and it took out the day before that's high as well. So for me, the previous day's highs and lows are always big levels to watch. And if we see a market moving through, then it can be a suggestion, maybe that things are changing. We'll see what happens. But for me, the fact that oil has managed to break through the last couple of days' highs suggests we could well be getting to a stage where this weakness could be over. And if you flick on to the daily charts, I don't think we have all the data here, but if we went back, you'll see there's some support coming in around about 42. So for me, what we've been seeing in oil in recent weeks is just a correction, and maybe it's time for another run back up to 50. So I have got an order in to buy it, but it's a long way away. It's maybe just over $1 away from where we are now, 45.20. I put an order in yesterday thinking, right, if the market sells off, I want to be a buyer here, and I'm going to have a stop below that low, a sort of 44.30 lows, but the market's got nowhere near that yet. But you'll see what happens as the week goes on, and maybe review it at the end of the week. So lots to watch. We're going to start wrapping things up now. But if you have any questions, just fire them in. But the immediate one is the pound. The pound against the dollar. We've got this interest rate decision tomorrow, 12 o'clock, tomorrow lunchtime. Let's see how the market reacts to that. What's it doing at the moment? It's just bobbling around at the moment, isn't it? Then I think the other one is dollar yen. Because again, if you don't want to sit there and watch the screens all day long, if you prefer to trade off daily charts, it's really interesting the move we've seen in the last couple of days, and we've got that massive downtrend. For now, it just looks like a move against that downtrend. And then, of course, the Dow going to all-time highs is one to watch as well, but also crude oil, to see if the move we've seen yesterday is finally turning the corner. But for the market commentary webinar, that's it for this week. I do these every week. I think we've decided to do them on Wednesdays. So if you are around this time on Wednesday, we'll be doing the webinar. But also, let me just flash this up. They do, of course, get recorded. So if you do miss them, you can always sign up and get the recording. I'll put it on my website. I'll tweet out the link, and I think Aondo will put it on theirs as well. One of the other things I'm doing with Aondo, I'm doing webinars on social trading, which I think is really interesting. And it's something, even though it's been around for a while, it hasn't been sort of discussed, I don't think, that heavily in the UK. So I've written a bit on my website about social trading, and I'm doing some webinars with Aondo, which again I'll put on Twitter. I think we're doing 2 a month on social trading on a Tuesday evening. I think the next one is next Tuesday night at 7:30 p.m. So join me for that if you can. But if you go to my website, www.tradeafter.com, there'll be some information on that there. But for now, we'll wrap things up. It's 1 o'clock, so that's not bad timing. I hope you found it useful, and we'll do it all again next week. I hope your trading goes well in the meantime, though.